viewers, welcome to the afternoon session. This is me Chaitra reporting from Live Tips. Welcome back viewers. Right now we have with us our fundamental expert Sharath. Welcome Sharath. So Sharath, what are the monetary policies and its effects on today's market?
RBI raised interest rates more aggressively than expected today, keeping up its fight against inflation, but signaled that it might be nearing a pause in its current tightening cycle. The Reserve Bank of India raised in its key short-term lending rate by 25 basis points and borrowing rate by 50 bps to check the rising prices. The new rates, which come to effect immediately, were announced as a part of first scheduled mid-quarterly review of the monetary policy. The hike in rates will lead to a rise in the cost of funds, funds for the banks, and eventually makes loans expensive, which will reduce consumption. As per coming to the inflation data, India's food price index rose 15.10%, which while the fuel price index climbed up 11.48% under a new series with different base year components and weightages. Government data showed today. The primary article index was up by 16.22% in the latest week. It rose 15.40% the previous week. The wholesale price index, which is the most widely watched gauge of prices in India, rose almost 8.5% in August, the first reading from the new data series. To check inflation, the RBI had raised these key rates by an identical margin in July. This is the fifth rate hike in this year. So investors can take careful strategies while trading in the market as such.
Thank you Sharath. Stay tuned viewers, we have the equity market roundup coming up. Welcome back viewers. To know more about the equity market, we have with us Mohan. Welcome Mohan.
Thank you.
So Mohan, how's the Nifty performing today?
Yeah, as you see that yesterday some profit booking may be expected, but today also market ran and it came in the beginning session before monetary policy announced. We saw some profit booking. After monetary policy announced, some profit booking came and Nifty made a low at the support level, as we mentioned in the morning, 5820 levels. So from there again it took a support and moved up for the target of 5900. Now it is again market is making a new highs. So we may see some bullish continuation pattern in this. So up move is still intact in the market.
So after the monetary policy by the RBI, how is the market performing?
Yeah, as I said, after monetary policy, market took an uptrend, and because of the some banking sector, especially some banking sector like SBI Bank today went up, and other PSU banks have moved up, and apart from this, some realty sector like DLF, SDL, IB Real Estate have performed well in this. So some movement on that. So even market has stood up in that. Yeah.
Okay, Mohan, any specific stock you're recommending today?
Yeah, as of now, we are not recommending any stocks because of the market is already in peak, and these are not the right time to go up because risk-reward ratio is not matching us. So we see some correction, then only we are giving. Even though DLF has given a wonderful breakout around 335 levels, but still we need to wait for the sustainability of 340 levels, then only we can see some up move on that. So apart from this, we are not recommending at current situation.
Okay, thank you Mohan.
Yeah, thank you.
Stay tuned viewers, we have more information coming up on the commodity market. Welcome back viewers. To have a quick overview about the commodity market, we have with us Navneet. Welcome Navneet.
Thank you.
So Navneet, how is commodities doing today? Let's start with crude oil.
Yeah. First we will have a look at the demand side of the commodity. Oil declined for the third day after an US government report showed that the fuel demand declined last week. So this was acting as a negative factor for crude oil prices. Gasoline demand tumbled by 2.6% to 9 million barrels per day. Energy Department report showed that fuel demand declined by 1% to 19.5 million barrels a day. So basically the thing is that the US economy recovery is not coming in an even way, and this is actually acting as a negative factor for crude oil demand. Coming to the supply side, Enbridge Energy Partners prepares to restart a pipeline after repairs. So this is actually adding into the supply of the commodity, and this will be affecting the prices in the coming weeks.
So how the cues coming from yesterday's US market and Chinese market impacting on base metal prices?
Yes. Copper dropped for a second day as China may tighten measures to curb the rising property rates. This speculation is actually acting as a negative factor for base metal prices, and we have been witnessing some sell-off coming in the Asian markets. Industrial production numbers in US cooled off to 0.2% after a 0.6% rise last week. So there is concern about the demand of the commodity from US economy also. A report yesterday showed that manufacturing activity in New York region expanded at the slowest pace in more than a year. Base metal prices expected to trade range-bound until the Chinese holiday season next year. So some clarity will be coming in the base metal prices after the October month.
Okay, what can we expect from the bullions today?
Yeah. Gold is expected to test the highs again as US dollar is expected to decline after Japan intervened to weaken yen. Central bank purchases, weakening currencies and investment demand are driving the prices. Basically, this is acting as a very good support for bullion prices. Global economic uncertainty is expected to support the prices, and so if anyone is going to looking for a longer term investment in bullions, they can enter at every dips.
So can you throw us some light on the Eurozone data releases?
Yeah, we are expecting two key data from the Eurozone area. That is, the UK retail sales data for August is expected to decline to 0.3% versus 1.1%. So this is a very good criteria to be watched out in the commodities market. EU trade figures are expected to come in at 1.5 billion as against the 2.4 billion that's expected. Basically, the thing is that the bounce back that is witnessing in euro for the last 2 months is supporting these trade figures, and this is actually acting as a negative factor for the trade figures to come in.
Thank you for that information, Navneet.
Yeah.
Stay tuned, viewers. We have more coming up on the currency market. Welcome back, viewers. To know more about the currency market, we have with us Vivek. Welcome, Vivek. So, Vivek, throw some light on the currency market that happened in yesterday's US session.
After yesterday's massive moves in the end towards session seems to be represent calm after the proverbial storms, with no further moves from the Bank of Japan, that is USD JPY fares fallen 40 pips level from the 85.75 high. Despite of moody USD JPY, the yen crosses were they put under pressure, testing of the resolve of Chinese central banks, which made USD JPY fell around 11160 high level. China Banking Regulatory Commission was rumored to consider high in capital base requirement to the tightening the management of its loan portfolio. Yesterday, intervention of the BOJ, means Bank of Japan, were key events to the currency market. The impact on the other major cross-currency rate were rather limited. Euro USD held close to the recent high. Today's currency trader will take close even eye on the statement which was US Treasury Secretary Ethan on FX and also China's monetary tightening policy.
Thank you, Vivek. Stay tuned, viewers. We have more information coming up for the post-market session.